Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday the 24th of March. And in the wake of Harry Houdini's 150th birthday, we're left wondering whether the FTSE can actually break the 25-year range that it's been in, basically between 7,000 and 8,000 at the peak. Obviously, we've been below 7,000 on various scares, but at least in the recent past, 7,000 has been the floor of the range. Looking for a clearance of the 8,000 area, the top of that rising trend channel, previously around 78.60, which was our target for the end of the month, and then after that, a May resistance line projection from last year as high as 80.25. If we can get to that by the end of this month, that would be quite a result, and that leaves us looking for the top of a 2006 rising trend channel, perhaps as high as 8,500. By the end of May, let's say, on that particular situation. But obviously, depends whether we can finally break that range that's been in place for so long. On the downside, things go pear-shaped, which obviously they have previously. End of day close back below 77.90 would suggest a test of the 50-day line towards 76.40. But with the 50 and 200-day lines both rising and that breakout not getting rejected at the first fence, let's say, it looks a little bit better than previous attempts at a breakout. Moving on to the DAX, which has been breaking out for months now. Here we've got that rising trend channel from October shown in black. We had an intermediate target there, 17,900 above that. We're looking for up to 18,700 by the end of next month. Very good looking picture there on the DAX. On the Dow, we had a softer end to the week, but still well above the floor of that rising trend channel from back in October. Top of the channel there heading towards 41,300. Maybe that's a target for May rather than April, but at least initially we were looking for 40,400 at that September resistance line projection while we're above the 39,000 zone. Moving on to Bitcoin, which has had a slightly rocky ride after giving us the record levels that we were looking for, up towards 73,000 plus, in fact. Now looks like we've got this hard right shoulder just around 68,000. We need to see an end of day close above that to give us 73,000 plus, and then ultimately by the end of next month up to 80,100 at the top of that January rising trend channel. On the downside, worst case would be that we break 60,000 and then head back to the 50-day line around 57,700. But at the moment, we might get away with a sub 60,000 probe. Moving on to gold, which has also been quite volatile in the recent past, pushing towards new record 2246 intraday, but then coming back below 2200. We want to see on the right side of 2200 to give us a possible move towards 2270 by the end of next month. Upside value while we hold above recent support and old December resistance at 2150. Moving along to the stocks, and perhaps not as much fireworks as we might have liked, but C4X in a very steep rising trend channel, maybe too steep, but we had the bear trap gap reversal. We failed to fill the gap, which is a positive. Twice we've tried on major occasions. Want to see this market through the 200-day line at 15.25 to give us 22 pence as soon as the end of next month. Only back below 12 pence really now, and the floor of that channel from November, delaying the upside scenario. On to Genincode, which was a request, and so far the request has gone well, up 20% nearly on Friday. The price action on Friday very reassuring in the sense that the low of the day was above a now rising 50-day line. That tends to be a leading indicator on the upside. And the view now is that the longer we stay above late January resistance at 5 pence, the greater the chance of a move up to 8 pence by the end of next month, or even sooner. 8 pence also important because that's the area of the 200-day moving average at the moment. Moving on to ImmuPharma, where you can see that shares are doing well after their island gap, island reversal bear trap that we had there back at the end of February, beginning of March. So heading to new lows with the gap and then gapping up again. That suggests some strength in the stock, and the fact that we managed to get through the 50-day line now rising 1.4p relatively cleanly is encouraging, as was the weekly close above the 200-day moving average. So looking for 2.5 pence well before the end of next month there, while we remain above the previous 1.6 pence target and initial March resistance. On to Intercede, which I don't think many people follow, but the charting situation looking very good. Rising trend channel there from July above the 50-day line at £1. We're looking for £1.40 as soon as the end of next month, backed by the rising 50-day line and an unfilled gap to the upside through that particular feature. Moving on to Kodal, where I've stuck my neck out in the sense that I'm looking for the shares to at least hit the top of that falling trend channel there from back in this time last year. 0.55 the level, hopefully get that by the end of next month, even if the shares then do what they did back in November and fall down again. But quite encouraging with the way that the bounce off the rising 50-day moving average came very strongly and was with a key reversal to the upside. So I think 55 is achievable there, especially while we remain above the 0.4 pence area. On to Mkango, where I cover the shares in the weakened small caps. Here we've broken through the 50-day line for the first time since basically the beginning of the year. 50-day line there at 7 pence, above 7 pence, looking for the top of that falling trend channel from the turn of the year, basically from December at 11 3/4, and that could happen as soon as the end of next month. Extended uptrend line on the RSI window as well, also helping the cause. Next up is Mirriad, and here you can see that things are shaping up well. We've had that rising trend channel base. We gapped up and never actually filled the gap. We just sort of traded just below the top of the gap, which is encouraging. Above the gap high day at 1 3/4 pence, or 1.7 pence. Looking for Mirriad to head up to 3 pence, hopefully, by the end of next month. Nice weekly close above the 200-day line at 1.84. Moving on to Pebble, and here, nice situation, rising trend channel base. I think that came after an unfilled gap to the upside. Back, in fact, there have been a couple of, 3 of them, I think, or at least 2, over the post-February period, and that suggests that the top of the channel there at 78p should be hit relatively quickly over the next few days, and then ideally we fill the gap up to 86 pence well before the end of next month. Best case by the end of next month would be up to 95, and that's valid while we hold above recent 65 pence support. Moving on to Powerhouse Energy, which has basically transformed itself in the last couple of months, which is encouraging. We hit that target line that we had there at around the 1.35 pence level, and come back a bit, but at least while we're above that initial March resistance around 1.02, looking for 1.3 or 1.4 pence over the next couple of weeks. Big turnaround there for Symphony with the fundraise news, bear trap gap reversal, and above the initial March resistance at 2 3/4. Looking for the shares to not only get back up to the old support area 3.6 pence, but perhaps as high as the 200-day moving average at 5.4 pence by the end of next month. But the key here is staying above 2 3/4 pence. On to TAP, where there's been juicy board changes, and here we've had a bear trap gap reversal, one of our favorite setups, so going to new lows and then gapping up. We also broke a line of resistance from back in January, 1.4 pence. The longer we stay above the floor of the gap at 1.35, the better the chance of a move to 2.4 pence perhaps by the end of May, let's make it, given the recent rather sluggish share price performance at TAP. Moving on to Zephyr as the last stock of the day, and here hitting our initial target there, the red line around 3.7 pence. Above that, we're looking for 5 pence. Hopefully by the end of next month. You can see that the 50-day line is now rising well, and we're probably just a day or two from the 200-day joining in to give us a run-up to the golden cross we'll be looking for sometime next month. That's it from me today. More updates tomorrow.